Well, yeehaw! Another great day of market action. Hey, everybody, it's John Seville for Acorn Wealth, your executive summary time. All right, so let's have a look at today's action. The S&P 500 once again respected the head and shoulder. We'll go back into the hourly chart. As you can see, we have crossed back negatively on the money flow, which is a good sign for the shorts. We go into the 1 hour chart, and you can see we're just kind of hugging this neckline on the way down here. So just broken back below the open range high. So kind of as we talked about, we were just going to kind of go back and forth in this area. Given that we have a full week, well, basically, yeah, full 5 days of trading left until open range resets on next Friday. This type of slow and steady type of movement is to be expected because it needs to hang around versus the straight up, straight down, which would start breaching the open range rules. So all of that makes sense to me. So let's have a look at the individual stocks, because as the market goes sideways, of course, individual stocks, as it is not a market, but a market of individual stocks, right? You remember me here saying that? So, I mean, again, fresh, beautiful rally. I mean, that pumped straight 20% up from that breakout, hitting its target, well, a short-term target we sent out today. 100% move on the options, pretty much. So, great opportunity to take out your original capital and let the profits ride, or take it all out. As well, you could also have taken some profit on your stock trade if you're in on that. And now we look to where this possibly is going next. As you can see, if we go to the hourly chart, we do seem to be in a momentum mode, and we're just really waiting for it now to prove itself. You can see that we have support here below the low of this candle at 534. So if we saw it break below 527 on the short-term chart, I'd probably look to see it drop to around 511 as a possible re-entry point. So you could consider, if you are still holding, consider updating the stop criteria to around 527. And of course, as a re-entry point, we were looking for a break above 568. But no matter how you trade that, obviously a wonderful move straight from the smart money scan. And those of you going through the patterns and probabilities course, as I mentioned in Trading Them tonight, great example of trading the extremes. So that's exactly what that scan is going to find for you, is these setups. So if you're starting out in the course, it's probably one of the first ones you'll be learning. And that's one of those great examples. Okay, so next let's go to Akbar. Akbar's doing great. Options up from $1.45. I think it was $1.45 over $1.50 or something like that when we alerted that. Those have had a 38% rally today. So beautiful move so far on Akbar. Love to see that. Great strength. ARDX also maybe getting ready. It hasn't went through that entry signal we've been waiting for yet, but have a look at this nice couple of days up, and 236,000 shares on Tuesday, down on 183, up on 161. So we're kind of consolidating, just waiting for this break. So keep an eye on that. NUGT, very much the same. As you can see, it's just wanting to squeeze. It's really trying to break out here. So kind of like the toothpaste at the end of a tooth, a roll of toothpaste is kind of clogged up at the end. There's this force behind it, and if it's able to get through that blockage, watch it just spew all over the place all the way up. So we'll keep an eye on NUGT too. Obviously a bit more aggressive, far more aggressive than the normal stock, because it's a triple leverage on the ETF, on gold, but on gold miners. But again, for you aggressive traders out there, watch for that one tomorrow as well, or over the next few days. BLDR on the short side, doing great, continuing its drop finally. After it broke down from that upward channel, it's in full form towards the downside. So again, it's just money flow going out the back door, continuing to drop. Of course, this is also from the smart money scan. Now, here's an interesting situation. PDFS, also from the smart money scan, and one of the short criteria we sent out recently, that did hit its entry signal, I believe. And as you can see, it's kind of rallying up here. I'm not convinced by this rally, though. The volume yesterday was 287,000. The volume today was 248, and so the volume has dropped a bit. even though it's going up, and this may very well just be market manipulation or a short covering rally. So this is one of the rare situations where I'd say potentially raise the stop signal from where it's currently at just above today's high to above that moving average to give the stock a chance, a fighting chance, or give the moving average a fighting chance to overpower it. We have been listening to the 5 and the 9 days so far on the downside, so maybe worthwhile giving the 20 a shot. So one of the rare situations where I'd say change the plan and maybe consider updating it to 1553 and giving it a little bit more room. All right, Cracker Barrel had a great drop today. Going through that, obviously that entry signal, the 150 October puts that we suggested looking at was up from 665 to 710, and the 156.50 September puts we'd also suggested. There's another option on options up are actually up 47% today. So nice move on those. And obviously we'll look for that to continue moving in its own direction. Again, not moving like the market at all, doing its own thing, which is what we want to see. Wendy's also going through its entry signal and on a good volume. Yesterday 1.46 million, today 2.11 million. So I'd add a stop signal here at around 15.33. And the target, of course, we discussed at around 13.53. You could also consider some September or October $15 puts actually have a bit more action on them, and those October $15 puts are 50 cents. So if you drop down to 13.50, they could be worth as much as $1.50. The September puts, I think, are around 35 or 36 cents or so. So a bit more upside, but again, depending on how much risk you want to take. LEG. I mentioned last night that I think this has got much more bearish movement to go. And have a look at that, 585,000 yesterday, 1.05 million shares today. So we're picking up strength in the downward momentum as we head towards that $45 target. So that's why I mentioned maybe just lower the stop and let it continue to run, because it could just continue lower and lower. So again, great to see that drop today as well. And last on the list is our new alert for Trading Room tonight is Walmart. And again, lots and lots of insider selling going on this little baby. And let's just hit. We'll go into Open Insider and punch in Walmart. And yeah, you can see a ton of insider selling coming just yesterday, the 23rd of the 8th, which means the trade date was the 21st. You can see trade date obviously a few days ago, but reported yesterday, and big drop today. The interesting thing about Walmart obviously is that it's in a head and shoulders formation. Money flow is very divergent, and the options are actually surprisingly quite cheap for to have a bit of a play if you wanted to. Now, if you want to see that, we did quite an extensive breakdown on Walmart today, as well as FRSH. So if you want to see the full explanation, jump into the Trading Room recording that went out earlier. But otherwise, you'll see that the September 15th 77.50 puts are only 85 cents. And lots of volume on those, and tons of volume that happened on the $78 puts. 2,400 share contracts traded today with an open interest of only 22. So that's pretty damn impressive. Very low volatility on these puts. So might be worth a little bit of a play. I'd be looking at the 77.50 puts. A confirmation signal of this breakdown would be waiting to see it break below. Let me just go to the hourly chart. As you can see here, we have an upward channel, a rising wedge that's occurring on Walmart on the hourly chart. And so this tells us that based on that pattern, you can see there's the high and the low. We duplicate that beneath, and that gives us a extension there for 77.76. So I'd be waiting for a break below 77.63. And that could be the ticket there. But if you wanted to have a play with the options, you may consider getting a little earlier. The other thing to look at is if we actually rally up into this range of anywhere from 79 to 79.50, or basically any of these moving averages. We've got one here at 78. These could also be again, you sell resistance, buy support. Right now we're in between the two. So if we rally up to resistance, that could be a good time to short. Or if we break below support, then we're at resistance, that could be a good time to short. So have a check of that tomorrow, but those options look interesting. And again, it's a very speculative play. You could buy them for 85 cents, and if the thing drops all the way down to the target, which would because I'm looking at a target here of let's just say 72.53. That's a pretty decent drop. So you can end up making 5-6 times your money possibly on puts like that. So so there you go. Let's keep an eye on that. And 72.53 is a target. And yeah, there you go. What that's all about. And now don't forget, don't miss tomorrow's live session. It'll be at 9 a.m. Pacific, 12 p.m. Eastern. And so for those of you who weren't in the Smart Money class that want to join in, we'll be doing a live market analysis tomorrow of what's happening and as we go in towards the weekend. And we'll also be doing a breakdown on what's involved in the upcoming patterns and probabilities class. So for those of you who've been waiting to enroll in that or wanting details on that, we will be doing a live course for we do it once a year. We'll be launching that in September. So if you want to take part in the information session tomorrow, as well as the live trade analysis, you can do so by simply going to acornwealthcorp.com/event. And you can register for that. And we will be seeing you all tomorrow. Have a wonderful night and take care.